What has the investment climate been like this year, and what can we look forward to in 2015? Andrew Flavell, Wealth Manager at AlphaWealth, joins us to answer some of these questions. Andrew, lovely to have you.
Thanks for having me on the show.
Let's start with a reflection on 2014. Three of the most exciting and most significant developments that you think the world paid attention to in the past year.
Okay, well, on the local front, we're looking at a very different environment in the last month than we were if we were looking 2 months ago. I mean, the JSE's had a soft December, so I'd say the biggest highlights are if you were long resources, you would have had a terrible year in a very much deflationary environment, and then globally, you're looking at a world where interest rates just haven't started to tick up. I mean, at one point this year, you had US bond yields trading at under 2% on the 10-year bond. So yeah, it's been those are kind of the two things that have stood out on the investment front, and volatility is definitely back in the market. The days of kind of buying your index trackers and watching the market rise are definitely over.
We had a board on screen a moment ago where you highlighted two South African entrepreneurs who've managed to shake the environment that they're operating in. Elon Musk, together with Mark Shuttleworth, in his case with the FSB.
Absolutely. So that's set a precedent now for investors looking to take money offshore. And the proceeds of that, the 250 million that Mark Shuttleworth was actually awarded from the South African Reserve Bank, has now been put into good use to help people who are looking to take money offshore. They're able to utilize that for legal and professional opinions and advice. And then you've got Elon Musk, who seems to be changing the world on a daily basis. If it's his rocket right across the States or his elevator to the moon, who knows? He's a seriously entrepreneurial guy and South African. So yeah, it's Tesla, the rise of Tesla. I mean, they got 500,000 cars now that they're putting electrical power into. It's a huge stepping stone for him, and it's a sustainable, looks to be a profitable and highly revenue generative business. So
let's take a look at away from developments, and let's take a look at one of those once-off events that we are all looking forward to. Had the day marked on our calendars. I think for me, Janet Yellen taking over from Ben Bernanke, and then of course it's been fed and more fed for the rest of the year since.
Yeah, correct. I mean, for fund managers, if you've owned the S&P 500, it's probably been the best performing fund, and that's a function of your stimulus, 85 billion being injected into the market through their very expansionary monetary policy. You see someone like Janet Yellen putting $85 billion in, inflating asset prices, and then when that's tapered and then it finally pulled, as we saw last month, equity markets offshore actually didn't respond too badly. It shows that the US really is starting to gain some good traction.
And of course, the board there on screen also adding two of the other issues that are so well captured in the note that has been put together. A little bit about Russia, and then maybe a quick one on the oil price, Andrew?
Yeah, so Russia and the Crimea situation, not great for kind of global investor sentiment, and that actually links straight into the oil prices. What is at play? Who's keeping the oil price low? Is it an American-Russian government type issue, or are the Middle East looking to kind of have an impact over the fracking that's going on in the States? So the oil is a little bit more complex, and is the oversupply that we're seeing justified, or is there a lack of demand coming into the market for oil? So now we see oil trading below $60 a barrel. From our perspective, it seems like a short-term iteration, and we do see it normalizing in 12 months to $80 a barrel. And then it seems like the worst is over on the Russian Crimea front. Putin understands now that he has to live within a global context, and but on the back of that has done a very interesting oil deal with the Chinese. So it definitely does keep one on their toes, but the worst and kind of the most dramatic impact on the market, I'd say, is behind us. It's amazing how people begin to live with these type of issues. I mean, they start saying, well, yeah, we've got the minute it's on the headlines daily, you kind of get complacent, and eventually everyone's priced it in, and it's kind of ready to move forward into the new year.
If what you're saying is that the worst is behind us, how optimistic then is your view for 2015?
2015, there are three things in our view that's going to happen. First of all, the big trade that everyone was waiting for was the switch out of the US Treasuries, so letting those yields get higher, but the US Treasuries have been in an absolute bull market, so we see towards the end of the next year that's starting to reverse. The second thing is spike in volatility. We see the volatility index really starting to move upwards, and towards the mid-20s, can't stay below 15 for too long. And then the third thing is switching from your passive investment into more active, non-correlated asset classes.
How come though? What if you're one of those who wants to take the easy way out and you don't want to get stock specific and just put your money in any kind of index fund and get the average performance?
Let it do its work, right?
Exactly.
Yeah, so that's great when you're trading at a multiple of 12 times, allowing the whole capital market to re-rate to the level it is today. Globally, let's work on 19 times. And yeah, you've had a great ride and has been inflated through stimulus. Now stimulus is off the table, you're trading at a premium to fair value, it's no longer the time to be sitting passive, and for that reason we see non-correlated asset classes, stuff that you sacrifice liquidity to get that same outperformance. Those are our big trends for the year. So one, will the US interest rates start going up? We see that towards the end of next year. Drive towards non-correlated assets as a result of increased volatility in the capital markets.
Maybe a sub-trend that I'd like to get your opinion on, Bitcoin and the uptake of Bitcoin. I learned this year that there's also BitX, which is an exchange sort of platform where you can actually trade Bitcoins. I mean, what do you think is going to be the big momentum driving the acceptance of Bitcoin, especially because people have reservations about its safety and its utility?
Yeah, so the ETF was actually launched by the Winklehouse brothers from the Facebook movie, and they've built that to try and accommodate the investor who's actually not too astute in terms of setting up an online bit wallet and a place to store and house their Bitcoins. But it's not so much Bitcoin specifically that we've seen as quite a big movement in 2014, but it's more the international acceptance of these online virtual currencies and how that can potentially derail currencies as we know them today.
Well, I'm still not a fan of it, but it will be interesting to see how the plan sets out.
I'll get you a bit wallet for Christmas. How's
Oh,
that?
wow. On that note, that was Andrew Flavell. He's a wealth manager at AlphaWealth.